Hi everybody, it's TJ, the Backpack Trader. I know I haven't done a video in a while. I apologize for that. Been traveling a lot. And I thought I would do something different. I'm pulling up the Spotlight Master Suite. It's kind of been the forgotten child lately. It's an amazing strategy. Coincidentally, I've received a lot of questions about it lately, probably because we use it nearly every day in the trade room. It's been working for years. Got some really great things to like about it. You can do so much with it. And I thought I would take this opportunity and kind of revisit it. Look at the most current session. This just happened on Friday. Crude oil. This is a long-running trade plan. It's one of the plans where I introduce the concept of mini sessions, doing trade plans for mini sessions where you can do a complete trade plan that starts at a certain time, like 9 a.m., duplicate it on another start time, maybe 9:30 or 10 a.m., do it again, 10:30 or 11 a.m. We use it for the crude oil inventory report. That could be considered a mini session, for example. And like this, you can have your cake and eat it too. You can trade less, trade better, and make more as a result, but still trade more by duplicating the trade plan. So within the trade plan, you're trading less, but if you want to trade more, you just duplicate that trade plan and add another trade plan until you have the right mix. So the trading less to make more is very important. Power of Quitting teaches us that. But we can diversify by adding more trade plans. And the thing is to not to get too many, just to get the right amount. I kind of got sidetracked. That's not really the subject of this video. I thought I would just walk through how this strategy works. Now, one thing you need to know is that it grew and evolved out of Counterpunch Trader, which we still use also. Counterpunch Trader is great. This is a Spotlight Master Suite. It's designed to shine a spotlight on the best trade setups with the highest chances of winning. When you are in a long trade, all the bars turn green. When you're in a short trade, the bars turn red. And when you're flat, the bars are gray. And that helps you psychologically stay with the trade. And it also helps us test quickly whether a plan is going to work for us or not. That's a real important aspect of successful trading when building a proper foundation. All right, so the mini session starts at 9 a.m. This one's been winning a lot for years. Doesn't win every session, but because it's controlled and we only trade a little bit with the mini session, we're able to control our drawdowns and then take advantage of the winners when they come pouring in, and they do. The objective is to go to a target 1 and then take your profit, move your stop to break even. And actually, you're going to move your stop to break even at about 90% to target 1. But the point is that that's the minimum objective. And as you grow your account and increase your position size, you can start utilizing the bigger targets. So the idea is to win a lot, grow your account, get to a good balance in your account so that you can start increasing your position size. And then you could utilize the bigger targets and get better risk rewards. So the system uses a real unique and innovative set of indicators. First of all, it's pure price action. So the price action comes first. We're going to identify exhaustion points just like we do with Counterpunch Trader. And we're going to identify the balance of power just like we do with Counterpunch Trader. But that's where the similarities end. Spotlight is going to use a very unique form of oversold and overbought conditions as illustrated in this really unique and bizarre histogram down below. And it's also going to use unique support and resistance levels. What it does is it takes an exhaustion level, and if it's a certain proximity to a major support and resistance level, it will give you a setup. And we use different moving averages to show us the immediate and current support and resistance levels. So what I'm showing here on this chart is a 20 SMA, that's the blue line. A 50 EMA is the yellow line. We also call that the mustard line. And the maroon or magenta line is the 200 moving average. And I'm showing this on the chart because there are some filters that we're going to use to eliminate some trades. And I also like to make minor adjustments of my entries and stops around these lines. Just a little bit. Find it makes a big difference. All right, so that's the groundwork. Let's quickly walk through a few trades. By the way, I pretty much taught you the whole system. If you see a setup above the bar, the little plus sign's the entry. These are your targets, and it's a long trade. If you see the entry below the bar, the plus sign is your entry. These are your targets. That's it. When you click on the bar, the entire trade is here for you. You read it down in the direction of the trade from stop, entry, where you move your stop to break even, and then your targets. You have your risk information, the rewards you make to each target, and your risk reward information. So it's really great at a glance detail. All right, so the plan to trade this mini session starts at 9 a.m. And 1 minute early, this trade triggers in and zooms. It would have been nice if it pulled back to the entry. It didn't. And we always teach you not to chase a trade. So we're going to look for the next trade because we have to wait for our start time, and it was after 9, and this is the first trade. This is 52 seconds into the session. It gets short. It comes down. It hits target 1. The stop moves down. It comes up and breaks even. And literally in 2 minutes, the power of quitting results have been achieved. And target 1 is 18 ticks. That's good for $180 a contract on a full contract of crude oil. That's it. In 2 minutes, this trade plan is done. The mini session has done its job. You don't have to keep trading, because if you keep trading, the randomness of setups will ultimately hurt you. You'll end up giving your money back. You have a winning strategy, a winning trade plan, but that doesn't mean that trades don't lose. Trades lose. Trades always lose in every plan and strategy. So it's up to us to use our rules to keep our money and not give it back to the market. One of the key things that I find a lot of traders miss, and therefore they struggle, is this idea that you have to learn how not to lose money before you can learn how to start making money. And one of the key elements to that is having a trade plan that lets you stop trading with your profits in hand. Let's just walk through some scenarios so I could explain how these setups work. Okay, so the pink bars poke up, the market's overbought again, and you have a short, and you have a setup to go short right here. Now this would trigger in and end up flipping over to long, except that I use my handy moving average. This 20 SMA is a really good pullback zone. Okay, so when I see a nice move up, that's what I call an action move. I could expect a 1/3 to 2/3 retracement, a reaction that could set up a subsequent action move. And I use the 20 SMA to help mark the end of the reaction. So I'm not going to get short right on top of the 20 SMA. Now, this could be an action move in the opposite direction, but I'm going to make the price push through and indicate if that's so by adjusting my entry below the 20 SMA. And that's just a rule. I don't need the dots in the chart to do that. I do that as a habit of my trading, of how I execute trades. And so that's not a losing trade. That's just a non-trade. And then the reaction is underway, and we get the yellow trade, which literally is a trade of exhaustion proximity to the support indicated by the 50 moving average. And that gets long, and it comes up and it hits the level where the stop is going to move to break even, and then it comes up past target 2, which is 17 ticks, and then stops out here. So that's a winning trade also. Now the market's overbought again. Now we get another setup. Notice that this time it's below the moving average. There's no adjustments needed. Now, mind you, you shouldn't even be trading because you would have hit your goals already. So I'm just kind of walking you through the setups now. All right, so you can see what happens. It gets short and it comes down. And this is actually probably the best trade so far in the morning. And it comes down all the way through, all 4 targets. And this is only 6 minutes in to the session. And you can see that's pretty good. 16 cents, 25 cents, 34 cents, 43 cents. Every penny is worth $10 per contract. right? What happens next? Well, you get the pullback into the 20 SMA. You have the proximity to the 20 SMA. It gives you another setup to go short. Comes down, it hits a target one for 13 ticks, $130, and then stops out at break even. Now the market's oversold based on it pushing up to blue. It's been oversold, but the price has been going down. We haven't had a long setup yet. We finally get one here. We're 11 minutes into the session. Gets long, and it comes up and hits all 4 targets and zooms on up to here, and now the market's overbought again. So then it gets short. And that one comes down and hits all the way to target 3, and now the market's oversold again, etc., etc. This time, well, this one's not going to win. This one's going to lose. This is part of that random distribution, and it's going to flip over to short. So even though the stop is way down here, it's not going to lose all that. It's not going to lose 29 cents. It's only going to lose a little bit because it's going to stop and reverse to here. So it only loses a little. And it gets short. And that one comes down and at least gets to a target 2. See, all these targets are perfectly tuned. Then it stops out. So it's adjusting to market conditions like all my strategies do. And I realize this video is getting long. So this was unfortunate. I mean, the stop moved down and then it stopped out and a bigger move was missed. So, I mean, you know, there's a fence, there's a line that we skirt like a tightrope walker where we try to reduce our risk and give the trade room to develop. So savvy traders might keep their stops above these lines instead of pushing right below them. It's already profitable. Even if you're risking a tick or two to try to stay in the trade, that's why we have these lines here, you see? And in so doing, you could stay in the trade and follow it all the way down. This is what you learn with time and experience and trading. You start to see it over and over. This is why I keep using these same lines, because it shows me areas to hide my stops, adjust my entries, and try to stay in trades, especially when it's trending down. It's another small losing trade that flips to long, and that one wins, almost gets to target 2, and we're not even 30 minutes into the session. There's been 2 partial losses. Every other trade's been a winner. This is a trade off of the 20 SMA again, and that one is going to zoom up and be a really big winner. Look at that target 4 before it comes down and stops out. All right, so that's a 30-minute walkthrough. This video is a bit longer than I thought I wanted it to be. I'll try to do more on Spotlight Master Suite. This is an amazing strategy. You could see the main trades are the oversold and overbought, and the proximity trade off of the 50 moving average, which is the SMS gold level. The diamond level comes with 6 or 7 more setups. The thing is, this is an amazing piece of software. It could do so much. If you're interested in this, put it in the chat. Let me know. Send me an email. Have a great day, everybody. This is TJ with the Backpack Trader, Spotlight Master Suite, and I'll see you on the next video.